Start with the big picture takeaways on NVIDIA after this D.C. summit. The shares almost kissed that new high, or made a new high this morning.
Yeah, they did. Look, I mean, people are getting excited about the story again, especially as we approach earnings and then year end into next year as their new platform, Blackwell, really starts to ramp. And look, by all indications, their own commentary, all the supply chain checks and everything else, demand for this product just looks off the charts. And you know, it's usually a good time to be owning NVIDIA into the launch of a product cycle, and that's where we are right now. And this cycle, if the checks are any indication, has the potential to be massive. So people are getting really excited about it.
And maybe it's just a kind of near-term technical analysis, but I listened to Katie Stockton. She says, you know, maybe it's range-bound for now. Maybe we go back under 100. You know, there's been a lot of excitement and a lot of hype. And when I know about Blackwell, you think, well, most people know.
Yeah, I mean, the last time it went under 100 was when there were some rumors about some delays to Blackwell, some redesigns to some of the chip components that are on it. And as it turns out, there were some issues. They were able to sort of work through it in a relatively quick fashion, and it kind of turned into sort of a nothing burger, at least from the standpoint of the trajectory of the ramp. It doesn't look like it slowed anything. But that was the last time it went under 100. Short of anything like dramatic like that, I don't know if we see that anymore. Like I said, at this point, the indications that the numbers are much more likely, I think, to have an upward bias than a downward bias. And I suspect that's true for the stock as well as we get into the ramp into the end of the year.
Real quickly, I want to ask.
Huang stated last week in an interview that Blackwell is in full production. Blackwell is as planned, and demand for Blackwell is insane. Regarding Blackwell, he also remarked, everyone wants to have the most, and everybody wants to be first, which amply illustrates the reality of an AI arms race in the 8th sector. In addition to Microsoft, Amazon plans to invest more than $60 billion in capital expenditures, CAPEX, in 2024, including investments in artificial intelligence. Meta Platforms intends to spend up to $40 billion, whereas Alphabet will spend about $50 billion. Oracle plans to increase its $6.9 billion in capital expenditures from its fiscal 2024 to its fiscal 2025. Huang predicts that expenditure on AI infrastructure will surpass $1 trillion in the upcoming years, which means that NVIDIA's data center revenue still has years of growth ahead of it. Currently, NVIDIA's stock is trading 11% below its peak. For the company's fiscal 2026, which starts at the end of January 2025, Wall Street is projecting $4.02 in profits per share. This gives the stock a forward price to earnings, P/E, ratio of 31.8. NVIDIA produced remarkable, game-changing results in a comparatively short amount of time. Over the last 5 years, the stock has increased by about 2,800%. In current currency, a $5,000 investment made in the company 5 years ago would be worth almost $140,000. However, investors might be worried that the tech stock is too costly to be a wise investment right now. Even though a huge return over the next 5 years might be improbable, there is a compelling argument in favor of purchasing NVIDIA stock right now. This is why there could be a lot of benefits in the near and long terms. Companies who want to train and create artificial intelligence, AI, models can benefit from NVIDIA's continuous innovation and release of new chips. It currently holds a commanding market position and is extending it in an effort to maintain its advantage. The new Blackwell AI chips from the business can run up to $40,000. CEO Jensen Huang claims that despite their high cost, demand for them has been phenomenal. In a recent interview, Huang revealed that corporations are still keen to get the newest and greatest processors because everyone wants to have the most and be the first. This could be the clearest indication yet that the AI boom is still going strong. That's encouraging for investors since it shows that there is still a strong market for the company's semiconductors. NVIDIA's stock did not soar when it released its earnings in August, even though the company had grown by 122% and had reached $30 billion in revenue for the quarter that ended in July. Perhaps the expectations were a little too high. However, if Huang's assertions on the strength of the Blackwell chip demand prove to be accurate, the business might provide revised and more optimistic guidance for upcoming quarters. That might be exactly what's required to raise the stock price this year. November is when NVIDIA is anticipated to release its next earnings report. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
I'm talking about the endless horse race among Microsoft, Apple, and NVIDIA, the race for the title of largest company on Earth. Who's in first with a $3.5 trillion market cap? Who's placing at $3.25 trillion, and who's just showing at $3.1 trillion? Nor do I like comparing the net worth of NVIDIA CEO Jensen Huang to the market cap of Intel or Boeing, because after all, why shouldn't he be worth that much? As Babe Ruth said when he was grilled about making 80 G's to President Hoover's 75,000, I know, but I had a better year than Hoover. Low bar. I know many of you think I'm drinking the Kool-Aid straight from NVIDIA's water fountain, which is why I want to give you a refresher about why I believe in this one and why you shouldn't get so hung up on the magnitude of its market capitalization. After all, every time this amazing stock passes another milestone, I hear that it's over. It was over when it passed Intel, over when it passed Cisco, over when it passed Amazon. I say it's not actually over until it's actually over. And in NVIDIA's case, that's going to be a very long time from now. Here's why. Almost every company that competes with NVIDIA has limits. Google and Meta are, for the most part, advertising firms. Amazon's a merchant. Microsoft makes software. Apple's a hardware stream and a service stream. NVIDIA has no such limitations. It simply makes computing power, the best, most efficient computing power on Earth. Countless machines need to be replaced by NVIDIA's platform. Maybe it's more than $1 trillion worth. NVIDIA is an inventor of pretty much everything it wants to invent because everything needs to be digitized, and NVIDIA has the equipment to digitize. NVIDIA's platform gets smarter every year and cheaper every year and burns relatively less electricity every year. So the more these big companies buy from NVIDIA, the bigger the return. It's a deflationary machine with a great return on investment. Or think of it like this. You want driverless cars? You need an onboard brain, you need a simulation brain, and you need a training brain. 3 brains. Only NVIDIA makes all 3. If you believe in autonomous driving, then NVIDIA will dominate what could be the biggest market in the world. You need robot brains, NVIDIA. You need healthcare brains, NVIDIA. Climate, NVIDIA. Industrial, NVIDIA. Plus, there's no zero sum here. Maybe that's why it's so joyous to me. NVIDIA is more of a rising tide that lifts all customer boats. Like I said at the top, their technology is so good that it's given birth to entire industries. If Oracle wants to build a data center, Larry Ellison picks up the phone, calls Jensen Huang, is done. If Meta wants to compete with ChatGPT and Claude or anyone else, Zuckerberg just calls Jensen Huang. He has to if he wants Meta AI to stay competitive. Unlike so many other companies, there's no Jensen wins, you lose. Each iteration, and there may be many, many iterations, creates more computing power, and the demand for more computing power is insatiable. It probably always will be, and NVIDIA is where you get it. The customers will never run out of demand. So let's stop trying to figure out who wins the horse race. There is no horse race. There's just this one company out there with products that are faster, smarter, and better than everyone else's, a company that can raise everybody's game, run by one of the most intelligent, thoughtful geniuses I have ever had the pleasure to meet. And that's why I say, NVIDIA, own it, don't trade.
It's much simpler to argue for long-term investors as to why it might not be too late to purchase NVIDIA. Many organizations are creating their own AI models and incorporating new technology into their processes as the AI revolution gets underway. Grand View research analysts predict that if the worldwide AI chip market continues to develop at a compound annual growth rate of 28.9% until the end of the decade, it may be valued over $323 billion. NVIDIA stands to gain from all of that future development, since it leads the AI chip industry. The stock is trading at a projected price-to-earnings multiple of 34, which may not seem all that costly for the rapidly expanding company, even with its recent big gains. Even after accounting for the 5-year growth that experts anticipate for the company, its price-to-earnings growth ratio of 1 indicates that it's a good purchase. Although there are AI stocks available that are less expensive than NVIDIA, investors can feel somewhat safer about investing in NVIDIA since it is the industry leader in AI processors and a well-known brand. NVIDIA is among the safer growth stocks you can add to your portfolio right now. It has the potential to be a strong market-beating investment, even if it doesn't produce 4-figure returns in the next 5 years. NVIDIA's market valuation was $144 billion at the end of 2019. At the time, chips made for the video gaming industry accounted for almost half of the company's revenue, with the data center industry contributing around 30%. However, as of the most recent quarter, the data center and AI segment accounts for 87% of the top line. Without a question, this is the segment that will have the biggest impact on the company's future. The rapid expansion of the AI business is partially responsible for the company's current dominant position in the top line. Gartner projects a 33% increase in demand for AI processors by 2024. It's anticipated that average yearly growth will surpass 20% during the next 5 years. Currently, NVIDIA controls a staggering 88% of the market share for GPU spending. According to data from John Petty Research, NVIDIA's market share has only increased during the previous 12 months. NVIDIA can still achieve great outcomes even if its market share declines over the coming years due to competition pressure because of the underlying market growth. There will be no shortage of industry expenditure as artificial intelligence, AI, quickly emerges as the biggest new trend in a generation. Over the next 5 years, Wall Street analysts expect NVIDIA's sales to rise by 52.5% annually, which is a slight decline from the 57.2% compound annual growth company achieved in the preceding 5 years. 5 years ago, NVIDIA's market capitalization was $144 billion, and the share price was 15 times sales. NVIDIA, a $3.2 trillion firm as of this writing, is valued at 34 times price to sales, down from 46 at its peak. With that year-end 2019 multiple, NVIDIA's current valuation would be $1.4 trillion. Even so, it serves as a clear reminder to investors that NVIDIA's value has increased due to both its underlying sales growth and multiple expansion. However, given how swiftly NVIDIA is expanding, one may argue that its premium pricing is appropriate. If NVIDIA continues to grow at the 52.5% annual rate predicted by analysts, it will generate a staggering $794 billion in revenue by 2029. To reach $10 trillion at that point, the corporation would require a price-to-sales multiple of almost 12.5. Although there is no assurance that this extremely optimistic scenario would materialize, NVIDIA might very well approach the $10 trillion milestone if analysts' growth projections are even somewhat correct. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Rest of the space as well, but what do you have for the PE here? I mean, what are the earnings that the market is expecting, and what do you think is possible, and what should the multiple be for a company growing like this?
Yeah, even the multiple is actually not that expensive if you believe the numbers. I think the sell side's like somewhere around $4, maybe a little more. I suspect the buy side, the investors are higher. They're probably closer to 450 or 5. And again, if you look at some of the supply chain checks and you see where the revenues could go, if the demand is sufficient to meet the supply that is likely to be available, you could get numbers that are higher than that. And so if the numbers are any close to being correct, the stock's 130, it's called like mid to high 30s multiple on a realistic kind of number. It's not that expensive. And I've made this point before. It's much cheaper today than it was before the run started a year and a half ago.
Right, because the earnings
the stock's gone up a ton, but the earnings have gone up much more than the stock. So as long as these numbers are sustainable, but that's the controversy is the numbers have gotten so big so quickly, like, is it sustainable? That is the question. But for now, like I said before, I suspect numbers are much more likely to be going up versus down.
And is it cyclical? I mean, historically speaking, I mean, the new chip is always, gets a high multiple, but over time, they become too cyclical. They get lower multiples as a result because investors don't like the ups and downs. And some of the bulls on this have to say basically that it's not going to be cyclical this time around in order to justify trading where it is and with the expectations where they are. And what's going on with the rest of the industry in terms of supply and demand right now? Yeah,
you bet. So if we look at the rest of the industry, like, this will be an upturn year for semis in general, but I wouldn't say it's a healthy upturn. Like, memory is going to grow a lot, because memory was horrendous last year, and actually they took supply offline because the demand was so horrible, and because of that, pricing went up, and so memory will be good. PCs and smartphones, they're okay. You're probably not getting a lot of growth, and there's some worries about things like CPU inventory in PCs. Data center, like AI is off the charts, but traditional data center networking and CPUs are pretty weak. Industrial has been weak. It looks like maybe some parts of that have bottomed, but we're not seeing a ton of signs of recovery yet. And automotive is now starting to roll over, maybe in a pretty big way. We've had a number of OEMs in recent weeks have negatively pre-announced in some pretty bad fashion. And so in general, like outside of AI, I wouldn't say that things look fantastic, but AI demand, like I said, right now it's much more, it's being gated by supply rather than demand. They're selling everything that they can make right now in AI. And fortunately for NVIDIA, that's where they are. That's where they play.
Up 2,000% in the past 2 years. One of the great stories. You've got a $155 price target. I think it has a little bit left to go. Stacey, thanks for your time today. Appreciate it.
The most potent graphics processing units, GPUs, for creating artificial intelligence, AI, models are provided by NVIDIA. As they compete for supremacy in AI, the company's impressive list of clients is paying truckloads of money to stock their data centers with those chips. In fact, according to NVIDIA CEO Jensen Huang, expenditure on AI infrastructure is expected to reach $1 trillion over the next 5 years, and his business will probably come out on top due to its overwhelming market position in the GPU industry. Huang expressed a number of nice things about NVIDIA's new Blackwell GPU architecture in a CNBC interview last week. This is the reason that every NVIDIA stock investor ought to be thrilled. The H100 data center GPU from NVIDIA established the standard for AI development last year. Although it remains highly sought after even now, the H200 has surpassed it in terms of speed at which AI inference, the process of feeding real-time data into models to generate predictions, can be completed. However, the Blackwell architecture from NVIDIA offers a significant performance boost. AI inference can be done at a startling 30 times faster rate with the new Blackwell-based GB200 NVL72 system compared to the H100 system. Furthermore, it is anticipated that each GB200 GPU will retail for between $30,000 and $40,000, which is comparable to the initial cost that many data center operators paid for their H100 GPUs. Stated differently, Blackwell is poised to produce a remarkable enhancement in cost effectiveness. This is crucial since the majority of AI developers lease data center processing power from internet behemoths like Microsoft and Amazon on a minute-by-minute basis. Blackwell will lower the cost of implementing more potent large language models, LLMs, opening up the possibility of advanced AI applications being accessible to a larger range of enterprises and consumers. NVIDIA recorded record data center revenue of $26.3 billion in the second quarter of fiscal 2025, which concluded on July 28. Comparing this to the same time last year, there has been a 154% increase. For the foreseeable future, the company and the majority of Wall Street analysts anticipate that data center revenue will continue to soar. But there have been concerns about how long the big tech companies can afford to keep investing so much on their AI infrastructure. For instance, during its fiscal 2024, which ended on June 30, Microsoft reported $55.7 billion in capital expenditures, CAPEX, the majority of which was allocated to semiconductors and data centers. In fiscal 2025, the corporation intends to increase spending even further. To what extent can the tech industry sustain this level of investment? The founder of Oracle, Larry Ellison, disclosed to analysts in September that he had dinner with Jensen Huang and Elon Musk, the CEO of Tesla. He remembers pleading with Huang for additional GPUs, both he and Musk, so they might realize their dreams of artificial intelligence. But the chip giant is unable to meet demand.